Hey, it's your old pal Lucid Stu again, and this is Stu's News, a review of American high-speed rail happenings over the last month. In this January 2026 episode, we'll take a look at what went down in December of 2025. Starting off with California high-speed rail and the biggest news of the month, California has dropped its lawsuit against the Trump administration over its rescission of $4 billion of federal grants, only 2 weeks after the federal government's attempt to have the suit dismissed was rejected by the court. This means belts just got tighter around California high-speed rail as identified funding shrinks from $43 to $39 billion. This is especially worrying since the projected cost of the 171-mile Merced to Bakersfield initial operating segment of the project has recently ballooned to nearly $37 billion. So cross your fingers that extra $2 billion holds. I just recently made a video about the California High-Speed Rail Office of Inspector General's review of the current financial situation and why that could be a major problem. Go check it out. On the bright side, the California High-Speed Rail Authority just released some new renders of its future Anaheim Station and Los Nietos Norwalk grade separation. Those are companions to their recently released draft environmental impact statement for the project's 30-mile Los Angeles to Anaheim segment. I also made a video about that, which includes renderings I made for the Los Nietos Norwalk grade separation. Theirs are admittedly better, but I also snuck in some real-world drone footage for you. Check it out. Los Angeles to Anaheim is the last segment of California High-Speed Rail Phase 1 yet to be environmentally cleared. Now we'll look at some Central Valley construction numbers. Capital outlay budget summary: $131 million expended in October. Keep in mind these reports run 2 months behind. Sad again, 4 months into the fiscal year and they're already $400 million underspent. By the way, the November forecast for design build expenditures isn't exactly encouraging. Daily on-site workers flat at 1,350. It's to be expected. This is the off-season. Construction progress on structures, 2 more completed. They are currently on schedule there. Guideway, 2 more miles of that completed with 80 total done. They're a little behind the forecast of 83 miles by the end of October. CP1 earned value chart, a tick up in schedule performance index to 0.94. 1 represents on schedule there. The solid blue line is actual schedule performance. The dashed gold line is officially late. You can see they're close to late, but if they can continue to accelerate pace, they might stay out of trouble. We'll see what happens in the coming months. And track work at the CP4 railhead near Shafter, California was completed in October, on October 5th to be exact. We'll come back to this during Stu's Boo Boos, so stick around for that. But that's all for California high-speed rail. Let's move next door and see what's happening with Brightline West. Alstom's lawsuit against the Federal Railroad Administration over a Buy America waiver for Siemens has been dismissed. The lawsuit was the result of Brightline West picking the Siemens American Pioneer 220 as their train set in competition against a variant of Alstom's Acela Liberty, which is currently in service for Amtrak on the Northeast Corridor. Siemens can now go about completing the first 2 train sets in Europe and constructing its manufacturing plant in upstate New York to build the other 8 for initial service. More good news for Brightline West. Bond buyer reports that nearly all bondholders from a March bond offer have agreed to a bond swap. The March bond had a dangerous repayment clause tied to fully funding the project, which of course has not happened yet. The new bond gives them more time to make that happen, which means the project has avoided losing most of that $2.5 billion from the March offering. Brightline West recently updated their cost estimate to $21 billion and is hoping to get a $6 billion railroad rehabilitation and improvement financing loan early in 2026 to wrap up funding. Brightline West posted up some new images on their website that were taken since I was out there in mid-November, showing work advancing at the Las Vegas station site. Grading is continuing. They're installing box culverts, and it looks like concrete work for the second above ground level of the parking structure there is just about done. Nothing new from them about the vehicle maintenance facility in Sloan. I'll be back out there in mid-March to check it out. That'll do it for Brightline West, but we'll stick to the West Coast for now, refreshing ourselves in the cooling waters of Cascadia High-Speed Rail. WSDOT put out an update of its corridor ID process. The project received $50 million in November of 2024 to fund its second step of the Federal Corridor ID program. The aim of Corridor ID is to get passenger rail projects organized and lined up for federal construction grants, which would happen at the end of its 3-step process. Step 2 is putting together a service development plan, which Washington State won't have done until 2028 for some reason. That would lead into the environmental process in Step 3, which should go relatively quickly considering Washington has put in 10 years of legwork at this point. Anyway, this next year they should start looking at routing options, which we'll hopefully hear more about. That's all for Cascadia. Let's start heading east and we'll drop in on our old friend, the Chicago Hub Network. On Illinois' current 110-mile-per-hour high-speed rail route, a current to double track 11 miles between the towns of Elwood and Braidwood has cleared the environmental process with a FONSI. That could open the project up to receiving some of the $5 billion the FRA will be handing out in the middle of 2026 through the National Railroad Partnership Program. The main purpose of the project is to improve scheduling efficiency as well as improving track maintenance and replacing an obsolete bridge, all of which would also benefit freight, which the new federal administration seems to favor. On the East Coast, we'll complete our Brightline news by checking in with Florida. It's not as upbeat as Nevada for sure. S&P has downgraded Brightline bonds to a CCC rating, which is their fourth worst possible out of 20. On top of that, their outlook is negative and they've issued some pretty dire warnings that default is likely for Brightline Trains Florida and its parent company Brightline East by January of 2027. S&P estimates Brightline's 2025 operating expenses at $256 million, which would put Brightline $40 million in the red operationally before even considering debt service expenses. S&P also estimates that Brightline revenue would need to increase as much as 50% in 2026 to stave off default, and that the service's long-term reality might be far below management expectations. Simply put, if S&P's new projections are correct, Brightline in Florida as it stands is not a viable for-profit enterprise. This gloomy situation is reflected in Brightline putting their Fort Lauderdale parking garage up for sale with the idea of leasing it back in a plan to trade longer-term expense for short-term liquidity. Brightline does have a few tricks up its sleeve, like leasing trackage rights to commuter services or expansion toward Tampa Bay, but nothing that would happen fast enough or on a large enough scale to temper problems that need solving in 2026. Bluntly, Brightline needs a lot more riders and it needs them now. We've been tracking the increase in ridership through 2025 and can see from their November investor report that ridership and revenue are both up about 14% from 2024, but it is very simply not enough. According to Brightline, they received the final 5 Siemens Venture carriages they had on order, so their toolbox is prepped and ready to go. They also say they're working on the financial dilemma. This is going to be a big drama to watch in 2026. Can Brightline find a way through this mess with as little as a year to figure it out? Let me know in the comments. That's all for Brightline. Now it's time to move up the coast and see what's happening with Acela and the NEC. The Amtrak Office of Inspector General indicates in a recent report that delays on completion of maintenance facilities could delay the introduction of new rolling stock, like the Alstom Avelia Liberties and the forthcoming Amtrak Aero train sets that will operate on the NEC. 4 maintenance facilities on the NEC will be upgraded to support those new sets, with only 1 completed by 2027 when the new rolling stock procurements are expected to be substantially introduced into service. The second facility is set to be done in 2029 and the other 2 in 2030. This chart shows how the stair-step nature of facility introduction could impact the rather linear plan for Aero train set introduction, with 2029 representing a hefty potential shortfall. The OIG indicates there's a potential that excess sets could end up sitting idle until new maintenance facilities manage to open. Nothing new for anyone that's been to Philadelphia lately. This would be on top of an already predicted capacity crunch, as Amtrak expressed at a recent board meeting that its new equipment orders would actually have less capacity overall than the current fleet. That situation would be paired with steady increases in ridership demand to potentially kneecap Amtrak's real ridership growth in the midterm. The end of the year saw Amtrak canceling at least 8 Acela trains between Washington, D.C. and New York City and Washington and Boston. No explanation was given beyond equipment unavailability, but it's because the Acela Express sets are crumbling and the new Avelia Liberties aren't coming online fast enough. According to an OIG report from 2023, all 28 of those Acela 2 sets were supposed to be in service in the middle of 2025. Elsewhere on the NEC, Amtrak and the Union Station Redevelopment Corporation approved an agreement regarding federal control of Union Station in Washington, D.C. This could lead to a $9 billion overhaul of the station if funding shows up from the NEC portion of the National Railroad Partnership Program in 2026. Further up the coast in New Jersey, the Gateway program has announced that the first of 2 tunnel boring machines made by Herrennecht in Germany is on its way to the project. They posted a time lapse of the assembly of that on X. That should arrive in the US by February of 2026 and begin boring the Hudson River tunnels in May after being reassembled and tested on site. The second TBM is set to follow a couple of months behind. Also from Gateway on X, some stats from the Hudson River ground stabilization aspect of the Hudson River Tunnels project. According to Gateway, that work is now about half done. That's it for construction. Let's look at Amtrak performance on the NEC. October numbers finally came in. That's the first month of fiscal year 2026. Amtrak putting up record numbers once more. Record monthly revenue and operating earnings for Acela. Same for overall, with Northeast Regional Service just barely below record results. A huge month for Amtrak on the NEC. That's also up year over year by a healthy amount compared to a strong October of fiscal year 2025. Up across the board, and Amtrak leading the way with a 30% year over year increase in operating earnings, possibly thanks to the introduction of the new Alstom Avelia Liberties. Numbers for November barely showed up on time, but they're even better. Another record month, this time thanks to Northeast Regional with over $100 million in revenue. A marginal increase over October because that was a huge record month itself, but up 20 to 47% over last November depending on the metric. Can they keep this up with all the headwinds that are building? Amtrak stats show that seat and train miles are only up 1%, but passenger miles are up 8%, so it's basically the same trains, people are just riding them more and for longer distances. That's all for Acela and the NEC. Now it's time for Stu's Boo-Boos, where I go over everything I missed or got wrong last month. For California High-Speed Rail, I mentioned last month that it wasn't clear if the CP4 railhead was completed in October as planned. That information was actually buried in a press release about a different subject in November. That was pointed out by eagle-eyed commenter JDification. You get a gold star. And another one. On New York MTA's Penn Station Access project, they said there would be 5 stations in the Bronx. While I'm sure locals would welcome an extra one, that should be 4. The project includes 5 total, including New York Penn, but that is in Manhattan and not the Bronx. A big thanks goes out to Drew Donkey for that correction. You also get a gold star. That brings your Spotted Boo-Boos gold star total to 27. Silver stars for me for a boo-boo free month, 10. It seems like this always happens after I get a silver star.
Don't get cocky!
As always, if you find a boo-boo in this presentation or something I missed, let me know in the comments. If it's a good one, you win a prize. The big thanks goes out to the Stu Crew Discord channel for their continuing help. If you'd like to join our motley crew, check out the invite in the description. If you'd like to support the channel, I have a couple of additional ways. You have that super thanks button below the video. I also have a railroad poster store. Get yourself a nifty poster at a reasonable price and help out the channel at the same time. Plenty more videos to come. Up next is an examination of high-speed rail between Chicago and New York City. That's coming soon, so keep an eye out for it. But that's all for now. Until next time, I'll see you on that big, beautiful freeway.